I would say that there's three main drivers for the growth. One would be top line growth, which we've reported on. Another factor would be just cost control from an operational perspective. And then the third key driver would be fair value gain. Well, look, we moved to the fair value gain model at the end of last year. Okay. With that comes certain factors. One of them being that we use independent valuers, for that exercise, which happens quarterly, as you know. We do take a conservative approach, where we are requested to use two valuers. We use the lower of those two, but each asset is valued independently. And there's likelihood that it fluctuates from quarter to quarter, but we don't expect anything dramatic. Yeah. So, well, first of all, let's focus on the fact that it grew 7.8% in half year over half year last year. But when I look at quarter over quarter, year over year, you've got, the main factor I would say is just the occupancy. We're taking a very careful and measured look at our tenant mix. We've done a premeditated move here in quarter two in terms of looking at underperforming tenants, focusing on our tenant mix, which I think shows in our traffic actually, and with the footfall increases as they are, we're really focusing on trying to provide the consumer what they want. Sure. Again, I always like to point out I'm a positive person. So, positively speaking, we're seeing over 50%, increase over last year, which I think is important to point out. But if we want to talk quarter over quarter, the main driver of that is we had the sale of the adjacent land in Johor Riyadh, which was a main driver of quarter one. So, this is a new addition to capital markets in the kingdom, first and foremost, and we believe that it'll provide more liquidity for our stock, and it'll attract more investors. So we looked at it pretty strategically. Yes, okay. We are. Yes, we are. That's the good news. So there's a project in Jeddah known as UWalk Jeddah. It's the extension of our growth strategy as well as part of our product excellence strategy. So it is what I would say UWalk Riyadh 2.0, where we're providing also more of an indoor area to shop, as well as this extensive food and beverage offer that will come online December of this year. We have excellent traction in terms of pre-letting. We're over 80% in a pre-letting commitment. Very excited about that asset to open. In addition to that, we've got Qasim Walk, UWalk Qasim, which is 50% complete right now. It should open at second half of 2024. And then in addition to that, we have good traction happening with Johor Riyadh and Johor Jeddah. And these are the new flagships that we're bringing to the kingdom, which they really have. The kingdom hasn't seen assets like this yet. They have more focus on design, luxury precincts and districts, more F&B, more entertainment. Quite excited about those. Both of those assets will come online in 2025. On Johor Jeddah, we're just over 20% complete, and on Johor Riyadh, we're closer to 30%. Yeah, we have actually a formal program put together that was announced last year. We've been able to unlock two of those in a sale. One was the King Fahd land, and the second is the Johor adjacent land that I mentioned earlier. That's already unlocked 875 million SAR. There is 1 million square meters in Qasim, which we actually are going to begin selling this month. And then there are a couple of other, non-strategic ancillary land plots here and there. There's one non-strategic asset that we are looking at selling, and some of that will begin also later this year.